Welcome to the class 11 accountancy class. Today we are going to discuss about the subsidiary book, non-cash subsidiary book. Of that non-cash subsidiary book, the first one is your purchase book. The purchase book is the book which records the credit, purchase of goods and services transactions. Only the credit, purchase of goods and services transactions are recorded in the purchase book. So that is, this purchase book is also known as the purchase register or the accounts payable book or purchase day book. Why it is purchase day book? Because that every day the purchase of goods and services which are done on credit basis are recorded in a separate book, that is called purchase book. That's why it is called purchase day book or the purchase register or the accounts payable book or the accounts payable register. So this purchase book is maintained separately because the business deals with a lot of credit, purchase of goods transactions. So that's why it is separated from the journal and maintain a separate book, that is a purchase book, so that it will be easy to record the transactions and the journal is to be simplified and reduced. There are numerous number of transactions. So with that purpose, that purchase book is to be maintained, and this purchase book is the format of the purchase book is like this. The first column is a date column, then a particulars column or the details of creditor from whom the goods is purchased. Then invoice column, that is the invoice, that is the number quoted. Then ledger folio column, that is the reference page of the ledger book in which that purchase creditors accounts are to be maintained. Then details, this column will shows the detailed calculations. Then cost, the amount paid, that means that after deducting the trade discount, the balance amount shown here. Then expenses, that is the freight charges, etc., that is added. Then total amount paid. So this is the total amount is calculated. So this is the format of the purchase book. While we are recording the transactions, it should be recorded in a very simple process. That is the date wise, the chronological order. That is the detail from the creditor whom the goods is purchased. Calculate the total amount, then subtract the trade discount if any, then put in the cost column, then expenses like trade charges, etc., is to be added, then the total amount is to be shown in the total column. That amount is to be payable to the creditors. So this is the format of this. At the last, total amount which is to be shown here, the cost amount, that is debited to the purchase account, and the total column of the expenses is debited to the purchase inwards or the paid inwards column. Then the total amount will be, so this cost plus the expenses should be equals to your total amount which is to be paid. So this is about the purchase day. Let's take the examples. That is the record the following transaction in the books of the Kunal. That is 2020 April 1st, he purchased from Videocon in India Limited, Kolkata. There is the creditor's name is given here. This is the Videocon Kolkata Limited. So enter. There is 2020 April 1st. So that is the purchase from whom? That is the Videocon India Limited, Kolkata. So that is Kolkata. That is the creditor name. Then what? That is a 30 color television. At the rate it is 15,000 is less trade discount 10%. So 30 color televisions put in the detail column. 30 into 15,000, that is 4,50,000. 50,000, then less 10%, 10% 30 into 15,000, that is 4,50,000, 4,50,000 then less 10% 30 into 15,000, that is 4,50,000, 4,50,000 then less 10% 30 into 15,000, that is 4,50,000, 4,50,000 then less 10% 30 into 15,000, that is 4,50,000, 4,50,000 then less 10% 30 into 15,000, that is 4,50,000, 4,50,000 then less 10% 30 into 15,000, that is 4,50,000, 4,50,000 then less 10% 30 into 15,000, that is 4,50,000, 4,50,000 then less 10% 30 into 15,000, that is 4,50,000, 4,50,000 then less 10% 30 into 15,000, that is 4,50,000, 4,50,000 then less 10% 30 into 15,000, that is 4,50,000, 4,50,000 then less 10% 30 into 15,000, that is 4,50,000, 10% trade discount. 10% trade discount, that is 45,000. Then net price, that is 4,05,000. So first column will show 4,05,000. This is the how it is to be recorded. Then freight charges 2,000. Then freight is 2,000. Total amount 4,07,000. So this is the how amount is to be recorded. So likewise, April 15, Sony India Limited, Guwahati, India Limited, Guwahati. So this is 8 color television sets at the rate 20,000 each. So this is 2 lakh less trade discount 10%. So 20,000 net amount 1,80,000. Just me, so 1,80,000. Then comes to the April 20, Music India Limited, New Delhi. There is 10 music system at the rate it is 10,000 each. Details amount column, it is 1 lakh. Then less 50% trade discount, 15% trade discount. This is 15,000. Net amount 85,000. Total amount 85,000. Then again April 30, Videocon, India Limited, Kolkata. There is 5 washing machine. The rate 15,000 each, so 75,000. Then less trade discount 20%. So this is 15,000. Net amount 60,000. So then trade 1,000. Total 61,000. So total amount now calculate. This is 3,000. This is purchase book what we have recorded. That is the first transaction. Record that amount of the goods purchased, multiplied the price. So in the details column, subtract the trade discount of this 10%. Then the net amount is shown here. So likewise, freight charges is there. Freight charges will be shown in the expenses column 2,000. That is freight limit. Then Sony India Limited purchased on April 15. So that is from Guwahati, 10 color televisions, 20,000 each, less trade discount 10%. Then total is 2 lakh, 10% less 20,000. So 1,80,000 net price. Then no freight charges, so 1,80,000 total. Then likewise April 20, Music India Limited, purchased 10 music system at 10,000 each. So 1 lakh price total 10,000 into 10 less trade discount 15%. So 15% of 1 lakh 15,000, net amount that is the 85,000. So trade charges is nil, so 85,000 total. Then April 30 from Videogun International Limited we had purchased 5 washing machines at the rate 15,000 each. So less trade discount 20%. So 5 washing machines of 15,000 into 75,000 total. 20% trade discount 15,000. The discount is 15,000. So net price 60,000. Trade charges is 1,000. So total amount 61,000. So total cost 7,30,000. Total freight charge inwards that is 3,000. Because at the time of purchase of goods we had paid the freight, so freight inwards or the carriage inwards we can say. Then it is total is 7,33,000. So at the last we have tried purchase account debit. So purchase account debit is 7,30,000. Carriage inwards or the purchase inwards, purchase freight inwards that is 3,000. Total amount payable 7,33,000. So this is the purchase account is debited. These are the creditors. So these creditors are credited. When we have posted to the ledger account, so in the ledger account, purchase account debited. In the debit side of the purchase account, you will show two sundries means total. Two sundries 7,30,000. You will not require to write Videogun India Limited 4,05,000, Sony India Limited 1,80,000 on the date wise. Then Music India Limited that is 85,000. Then Videogun again India that is 60,000. This is not required to write individually in the chronological order. So total amount will be transferred to sundries on April 30 on the purchase account. When we prepare the purchase account ledger account, in the purchase account debit side you will show two sundries, that is total amount is 7,30,000. So by balance correct. So likewise when you put the ledger account of the creditors, individual creditors, because all the creditors will not be shown in the one account, you have to prepare individual creditors account. When you prepare individual creditors account, then it will be so Videogun India Limited ledger account. So on that ledger account, on the credit side, by purchases account there is 4,05,000. So likewise Sony India Limited by purchases account there is 1,80,000. Then Music System India Limited again by purchases 85,000. So again Videogun India Limited already you had prepared this ledger account. This is April 1st, this is again April 30. So April 30 by purchases account that is 60,000. So this is the transaction which are to be posted to the ledger account on the different dates of the creditors. So this is what about the purchase book or the purchase day book or the purchase register or the accounts payable book. So next we will discuss about the sales book. This is the sales book. So purchase book we had seen. Then next come to the sales book. Second subsidiary book, that is the sales book. That is also another important non-cash subsidiary book, records maintained by the business to record the credit sale of goods only. Only the credit sale of goods are to be recorded. Credit sales of assets will not be recorded. This is recorded in the journal proper or the general journal. So this is just like of the purchase book. The sale of goods on credit is to be recorded in a separate book, that is called credit sales book or the sales register or the account receivable book or the sales day book. This is also called the sales day book, because every day we are business is going to sold the goods on credit to the debtors. So they have to maintain the separate register. There is sales register or the sales book or the sales day book to record the credit sale of goods and services transactions. So it is numerous, it is separated from the journal book and recorded separately. The format is same as the purchase book, that is the date column, particulars or the details of this is not the creditor. That is the details of debtors. Then invoice number, then ledger folio details, cost, expenses, then total amount. So this is the thing. You can see these examples, the same examples what we had shown or what we had taught to you, tried to you explain in the purchase book. The same examples are shown here. You can see here April 1st, 2020, sold to Videocon India Limited. So that is the Videocon India Limited Kolkata. That is the name of the debtor to whom you had sold. Then 30 color television, 15,000 each. So total is 4,50,000. That is the details column. Then less trade discount 10%, 4,50,000, 10%, 45,000 is the discount. So 4,05,000 is the net price shown in the cost column. Then the net price. Then the freight charges, that is 2,000. So total 4,07,000 amount that is to be receivable. Then second issue, we had sold on April 15, sold to Sony India Limited Guwahati. That is a 10 color television at the rate of 20,000 each. So that is 2 lakh, 20,000 into 10, 2 lakh, less 10% trade discount. So 20,000 is the discount. So net price 1,80,000, no freight charges. So total amount 1,80,000. Then April 20, Music India Limited. So that is the 10 music system sold at the rate of 10,000 each. So total is 1 lakh less 15% trade discount. So 15% of 1 lakh, that is 15,000. Then net price is 85,000. So total amount is 85,000. Then again on April 30, sold to Videocon India Limited Kolkata. That is 5 washing machine at the rate of 15,000 each. Total is 75,000. 15,000 into 5, 75,000 less trade discount 20%. So less 15,000, then 60,000. The net price, then the freight charges, that is 1,000. So this is total amount is for 7,30,000. Freight total, that is 3,000. Total is 7,33,000. Cost is this. Total amount freight is 3,000 and total. So total amount is 7,33,000. So this is the total amount, cost and the trade charges. So at the last we have tried sales account credit. So sales account total is credited 7,30,000. Freight outwards. This is freight outwards because at the time of sales it is freight outwards. At the time of purchase it is freight inwards. So freight inwards debited, it is freight outwards also debited. That is 3,000 because it is the expenses. Total amount receivable is 7,33,000. So that is the thing. So when we posted it to the ledger account, so in the sales account credit side, we will write buy sundries on April 30. So total amount, that is 7,30,000. So in the sales account credit side, buy sundries. So by individual debtors account will not be written. So buy sundries total amount is this on April 30. So when you prepare the debtors account, then on the individual debtors account, so debtors account is sales account is credited means debtors account are debited. So debtors account debit side, first April 1st in the Videocon India Limited Kolkata, debit side you write to sales account 4,05,000. Then again April 30 Videocon India Limited again purchase sold 60,000. So to sales 60,000 April 30. Total is 4,65,000. Then April 15 Sony India Limited debit side you write to sales account, that is 1,80,000. Then Music India Limited debit side you write to sales account, that is 85,000. So this is the how it is to be posted to the ledger account from purchase book or the sales book to the individual debtors or the individual creditors. But to the purchase account, sales account, it is buy sundries, it is transferred to the particular account. So this is how I try to show you through the examples, that is the purchase book and the sales book, and try to explain you with the help of examples to prepare the transactions, to prepare the book then posted to the ledger accounts. So this is all about the purchase book and sales book. The next we will discuss about the purchase return book and sales return book. Thank you.